Okay, welcome back. We have Cameron Brandt with us now. He's Director of Research at EPFR Global, tracks flows very closely. Cameron, good morning. Seeing you after a while here on the program, so good to have you. Prashant this side. So it's all about flows. The only thing is it is yen flows, not dollar flows. There is a report which suggests that 75% of the unwind of the yen carry trade perhaps could be behind us. I don't know if there is... I was struggling to get a number to it in terms of how large the carry... I heard someone say $2 trillion. There was another report which said it could be $4 trillion. But what does it mean when you say unwind of the yen carry trade is complete? Are we talking about yen shorts being unwound? And how do you track it? Your sense. Go on.
Well, we track it at a pretty high level, which is watching which asset classes are getting hit and which aren't. We're certainly seeing money flow back into Japan. Japan equity funds had a pretty healthy inflow during the past week. Flows into Japan bond funds were also a multi-week high. So certainly the repatriation process is underway. It's a little hard to sort of get a fix this quickly, partly because in some cases, since the unwinding of the carry trade has forced investors to sell, there's plenty of money around trying to jump on those more attractive assets that are available at a decent price. So the main risk reduction we've seen after all this ruction's actually been on the fixed income side. We've seen pretty significant outflows from high yield bond funds and leveraged loan funds and a move away from emerging markets debt. Though once again, and mirroring what we've seen for a while, on the equity side, both India and China seem to be getting a pass.
Okay. So can you elaborate a little bit on that, Cameron? For the Indian markets, how are flows expected to be? Because the going has been really good so far. Do you think we can build on to our gains?
Well, certainly the people are beginning to focus on the addition to key indexes. Sentiment overall towards the major emerging Asian markets has been very good. We've seen that more strongly reflected on the equity side, but it seems to be spilling over into the fixed income side as well. Both India and China bond funds had multi-week highs in terms of inflows this past week. And certainly the commentary surrounding Indian debt at the moment is that, unless your country's central bank gets a little spooked by overly strong inflows from foreign investors, that those foreign investors will start to come.
Hi, Cameron. Good morning. Good to see you in. Give us your sense about other asset classes as well. How have flows been to gold? That asset class actually has been holding steady. And maybe, in fact, it's under ownership of retail participation, so to call it. So that could do well from here. How are you seeing flows? And maybe even if you could give us a sense on cryptos, Bitcoin.
So gold continues to be curiously unloved in an environment where you would expect much more interest in building up a bit of exposure. Another 600 million out of, 350 million, I think, out of physical gold funds this week. Flows to crypto funds have certainly faltered, and quite how they will react to events, I'm not sure. I don't see them as an asset class that figured largely in the carry trade, but it is all new territory there. But no, certainly the usual suspects are still seeing fresh money. U.S. equity and bond funds had solid, if not spectacular, inflows. Money continues to pour into technology sector funds. How long that will run, given the much more skeptical background noise is an open question. But for the moment, any dips in the market are definitely being treated as opportunities to come in at a slightly better price.
Okay, we'll leave it at that. Thanks a lot for joining in, and have a great weekend. Cameron, thanks for being with us on the channel.